Good evening, everyone. It's Brandon, and I'd just like to make an update on the event that occurred today in the markets and my forecast going forward. So today in the pre-market, Mario Draghi and the ECB announced a stimulus package of 60 billion euros per month to hit the tape. Very, very bullish for the markets. If you note, just a couple weeks ago, I made a video. It was here on this candle, forecasting potential correction. It was a two-pathway thesis based on whether or not on January 22nd, Mario Draghi and the ECB would engage in this stimulus um, policy. So sure enough, they did. Sellers did not. Well, we had a field day for a couple field days for the time that the market allowed for it. But of course, in a primary uptrend and a bull market, there's buyers lying beneath, all selling. So the confirmation hit the tape today when we got this announcement on the newswire pre-market. So the forecast going forward is bullish. Just a couple technical indications that make sense. We're above all moving averages. We have a volatility buy signal. You can make the case that we're sitting at a resistance level. Something that I like is the ADX at a 20.11 indication, which is indicative of a trend strengthening. A strong trend is an ADX of 25 or above. So we're starting to trend higher. I wouldn't be surprised if tomorrow we see an inside day and potentially give back some of the move, just because today was a massive move higher. But who knows? We could see an extension. So it's just something to note that this is a resistance. From a weekly frame, that same ADX is at a 13.99 indication, so there's still no real sense of a trend. You could make the assumption that there's, clear skies ahead, and we should see higher prices in the market. I will go ahead and make that assumption that the bear case is off the table at the moment. All indications look like over coming weeks they should recycle higher. So, this is good. This is all good. So we are long and strong. But I will say that the 13.99 is not indicative of a strong trend. Still sideways from a weekly standpoint, but and it could just chop around for weeks to come. But I believe that the stock market will start to really press now that we have this stimulus package behind us and the clarity is there. I think that more liquidity should flow into the market, and fund managers especially will feel more comfortable allocating funds, and especially towards the end of the month, going into a new month, we could window dress this thing forward, and hopefully next week and weeks to come we could retest the 209, potentially 210 and beyond. From a monthly standpoint, it's important that I note, in my last video, this oscillator here had crossed down at the beginning of January, and based on today's move it has crossed back up. So there's no real indication of any real fear there. That was my fear gauge, and especially when the price action was trading below there was a start of a moving average cross down, which is a slight bearish indication from a monthly chart. You can make the assumption that potential measured move to 220 over coming months is a potential pathway from the bull case. What else do I see? I mean, that's pretty much it, guys. The bull market is here to stay at the moment, and that's it. We're gonna play it as we see it. Something interesting that I noticed was the euro. Let's see, futures are down just a couple handles. The euro US dollar pair trading at 13.6% higher. The euro is trading 13.6% higher than the US dollar. I think that we can assume that the euro and the US dollar may be par this year. Potentially the euro may weaken and be superior to the inferior to the US dollar. It's just a simple thesis. During our quantitative easing from 2009 through 2014, we pumped liquidity into the market, devalued our currency, and it's likely to be a mirror image in Europe. So I think that the US dollar, euro to US dollar pair should continue lower. So it's just something interesting that I noticed, and it just makes sense. So guys, that's it. I look forward to the continuation of the bull market. I wouldn't rush in on a Friday and get overly long. I would say if you miss the move, today, then wait till next week, because there's probably going to be a lot more upside in this market, and we do have earnings season. A lot of very high beta names report next week, so it's going to be interesting. There's going to be a lot of action. So that's it. Have a great night. Have a great Friday and a excellent weekend, and I look forward to making another video shortly. Take care.